very good evening. You're watching The Money Show on ET Now. I'm Mubina Kapasi. This is the show where we get you a gist of everything to do with your personal finances, how to invest better, save for the future, and of course, even spend all of your hard-earned and invested money in a wise manner, which we get for you every day on our Spend with TMS segment. So let's tell you what we have lined up today on the show. First up, we're going to be talking about the saving aspect, the tax aspect of it. We have two important deadlines. One is today. Today is the last date to pay your third installment of advance tax for this financial year. And the second big deadline looming large is in 2 weeks. This is the extended due date for filing of your income tax returns for fiscal year 2020 or March 2020. As we know, usually the deadline is July or September. Now it's been extended to December or January, depending on which bracket you fall in. So what are the new disclosures? What will be the documents you need to file your income tax return? We'll be getting you a gist of all of that. Later on the show, and keeping it with the theme of taxation, but shifting it 1 year ahead for FY21, ELSS, a scheme that's often been very popular, especially amongst those who want to invest in equity markets at the same time, get in a bit of taxation advantage as well of there. So we will be bringing on board one such fund, the Tata India Tax Saving Fund. We'll be meeting the fund manager, Mr. Rupesh Patel. He's a senior fund manager, in fact, with Tata Mutual Fund. So that's a part of our Meet Your Fund Manager segment. And finally, in our Spend with TMS today, we'll be talking about the concept of smart homes. Lots of myths to be bust over there. One of them being that you need to break down the entire wiring of your home and input the entire smart aspect of the home. Well, guess what? That's not necessary anymore. So in our Spend with TMS segment, we'll be talking about making your home a smart one. Let's kickstart the Money Show and introduce our very first guest today. We have Diptikant Pari, partner at BGJC and Associates LLP. Mr. Pari, thank you so much for joining us today on ET Now. So like I mentioned, we have two important due dates. One is today, where we have to pay the third installment of the advance tax. The second one, of course, and I suppose equally important, would be the filing of your income tax return. That's where you'll really get the benefits of any advance tax you may have paid last year. Let's first talk about advance tax. Who's eligible to pay advance tax today, and how much will they have to pay, Mr. Pari?
Yeah, good evening. I'm Diptikant. I'll just tell you what about the advance tax. The advance tax is basically a tax which a person will have to pay during the assessment year, and the liability to pay advance tax arises only when a person's annual tax liability exceeds 10,000 rupees in a year. And the tax liability of 10,000, and in case of senior citizen, they are not required to pay advance tax if they do not have any income from business profession. So in a nutshell, every person will liable to pay advance tax if annual tax liability exceeds 10,000 rupees, except the senior citizen whose income does not include profit and business from profession and business and profession. That's
Okay, understood. Mr. Pari, now, as an individual, two questions. Firstly, the TDS that has been deducted, perhaps on some rental income that I may have received, or any other fees, or maybe my salary as well. Do I have to consider that? And secondly, the other question is with respect to assessing my total income. Now, as a salaried individual, it's easy for me to assess what my total income is, and more often than not, my employer usually deducts the TDS on my behalf. So I'm largely covered over there. But as a business owner, or as a freelancer, I would really not be able to estimate my total income for the year. So how do I essentially work about that?
First thing I'll just clarify is that any amount of TDS which has already been deducted by the employer or the bank or any business connection, then this TDS will have to be reduced first. Suppose if a person's income is tax liability is 1 lakh rupees, and if its TDS liability is deduction is 90,000, so then in that circumstances the advance tax liability will not arise. That means this 10,000 rupees net of TDS and TCS from. And the second question which you have asked is that if in case of a salaried person, his or her income tax liability is being discharged by the company, and in that some same circumstances, so TDS, in that case, there is no point of paying any advance tax for a salaried person. Having said that, but at the same time, that person who is having salaried employee will have, if some other sources of income like interest income, saving bank interest in excess of 10,000 rupees, and capital gain income and or income from house property, then in that circumstances, that person is liable to pay advance tax if the amount exceeds net amount exceeds 10,000 rupees.
All right. Okay. Mr. Pari, what are the ramifications of not paying advance tax? What sort of penalty or interest would I be charged? And also, I think it's important to understand that now with the entire return filing process as well going online, most of the times this penalty is sort of calculated by the system itself.
Yeah, actually the penalty, honestly speaking, there is no penalty for non-payment of advance tax, but it's an interest at the rate of 1% per month will be liable to be paid by the SSC or the person for non-payment of advance tax. Like there are four installment of advance tax. So June 15 is 15% advance tax will have to pay. Suppose if a person is not paying 15%, then in that case 1% on the tax amount of 15% is liable to pay as an advance tax. Similarly, 15%, 45%, 75%, and 100% till 15th March. So after 15th March, again, whatever the shortfall in the advance tax, so 1% will be charged as an interest under Section 234B till the date of filing of return or the due date or extended due date. So that means in the present case, if an individual person is not paying advance tax or paid less amount of advance tax exceeding 10,000 rupees requirement, then in that circumstances, the interest will have to be levied on the less payment of advance tax and till 31st March, and after 31st March, so the section under 234B, 1% of the interest will have to be paid on the non-payment of advance tax if it exceeds, suppose if a person has paid more than 90% of advance tax till 15 March or 31st March, then in that circumstances, interest liability will not be there. So in a nutshell, only if a person is not paid 90% of its tax liability, then advance tax requirement will be there. Otherwise, there is no liability to pay advance tax after 31st March under Section 234B. So any doubt on this, please let me know.
Okay, understood. Okay. All right. Well, I think largely the ABCs of advanced tax have been, you've really managed to clear that very well, and I hope our viewers take advantage of these last few hours left to pay the advanced tax. Get going, folks. Just a couple of hours left. Make sure that you pay up. This is the third installment of the advanced tax that you'll have to pay by today to avoid any penalties or interest, especially if your total taxable amount and the total taxation on that amount is high. Okay, well, let's now shift focus to another very important, procedure for all tax assessees to conduct, and that is filing your income tax return. All of this advance tax that you're paying, this TDS that's being deducted, if in case you're eligible for a refund, you'll not be able to really claim that until you file your income tax return. So let's start off first, Mr. Pari, with the fact that firstly, the due date for this income tax return filing has been postponed twice and thrice by now. For now, I'll add, the due date is the 31st of December. It looks unlikely that this will be postponed. But nevertheless, what I want to understand, sir, is from the FY19's income tax return, how different is the file, the format, the form of the FY20 return?
I'll just tell you, okay, there is not much difference, but there are small differences, which is around 20 to 25 points, which has been incorporated in the financial year 1920 return. So one more major changes which the income tax department has made is that in case of a person filing ITR 1, then passport number details, if it is available, will have to be given in the ITR 1. And second important changes which made is, if a person is depositing cash of more than 1 crore rupees during the fiscal year, then in that case, in the return, it will have to be mentioned that 139.1 that cash deposit of 1 crore has been made. The third point which changes is that if a person has traveled foreign outside India, Then in that case, if expenses is exceeding 2 lakh rupees, then again also that need to be mentioned in the ITR. And the fourth point, which is normally important in the sense that electricity consumption exceeding 1 lakh rupees, then again that will have to be also mentioned in the return, which is to be filed under section 139(1). So these are the major changes which has been made, and the one more important changes which is made due to the COVID-19 scenario. The government has relaxed investment for the fiscal year 1920. So this investment can be made till 30th, 31st of the July, 31st of the June. So because of that, they have introduced one more column in the return, which is called Schedule DI, which where you have to mention any investment made pertaining to the fiscal year 1920 and made investment in the period April to June 2020. So that is one relaxation which is given, and that is a new disclosure. Basically, it's not a change, but it's a new disclosure we have to given in ITR. All other small changes like showing multiple account for the refund. Like earlier, we are showing only one account for the refund. Now you have a choice. You can give more than one account, but department can choose any account which you have shown out of the multiple account, then they will give refund to that. Then again in ITR 2, there is a changes which is made that earlier it was that simple that if a person has unlisted equity shares, so he or she was mentioning that total amount of unlisted shares, but now it has been mentioned also what are the types of company. That means it is a listed company or unlisted company or any specific type of company where that need to be mentioned. One more changes which has been made is that it has been made now compulsory for the persons who are not above the age of 8 years to file income tax return if they are registered taxpayer. That means if they have already filed the return in earlier and already registered with the income tax sites, then they are required to file the return. Earlier it was that if you do not have income which is above the exemption limit, then return filing was not required. But now this is a very important changes made. It says it is mandatory to file the income tax return online for all those registered taxpayers except for those who are above 8 years. So these are the important changes which has been made, and one more changes, also small changes in ITR 4, which was filed for the presumptive type of people. They are also that if you are a partner of the firm, then earlier it was that in ITR 4 it was not there. The column was not there to show this. You are a partner of the partnership firm, but now it has been clearly shown that you have to mention in the ITR 4 that you are a partner of a partnership firm, and the partnership detail with PAN, then amount of you have opening capital, closing capital, any remuneration you have received, and interest you have received. So all the details will have to be disclosed in ITR 4. So this is more of a disclosure requirement which has been made by the CBDT. These are the changes, important changes which I have told you.
Okay, so accordingly, it's better that all of you get to filing your income tax return soon, because there are certain changes, and even if you've been filing your return for the last 7-8 years, you think you're familiar, well, there may be certain new disclosures you'll have to make which you may not be prepared for, so it'll give you some time to run around to collect that data as well. You know what, very quickly, let's take some questions and queries. First up, we have Pranjal Barole, who says that I have been filing ITR for my business under section 44AD for the last 6 years. If I opt out of the presumptive taxation scheme this financial year, am I liable to get my books audited even if my turnover is less than 1 crore rupees? What would be your reading, Mr. Pari, of his query?
Yeah, the query is clear that says that the SSE is filing income tax return under section 44AD as a presumptive section for 6 years. And after that, the SSE want to opt out of this from 44AD and want to go for a normal tax return. But honestly speaking, that yes, if you are showing a income below the 8% or 6%, which is as per the section 44AD, then there is no chance. Even if your turnover is less than 1 crore, still you will have to go for audit of your books of account. That is a mandatory type of clause, and there is no relaxation thing.
All right. Well, on that note, we're completely out of time. So, Mr. Pari, we let you go on that note. Thanks so much for joining us today on ET Now.
Thank you for all your time. Thank you.
Well, moving on, Leaders of Tomorrow, ET Now's flagship series for entrepreneurship, is back with its 9th season. Tonight on the show, watch Mihir Bhatt, Chief Editor for IP's Times Network, in conversation with the MD and CEO of IDFC First Bank, V. Vaidyanathan, discussing India's economic recovery story amidst the COVID-19 crisis and the sectors that are showing an uptick in demand. Listen in.
If we were to take a sectoral view, and obviously there were some sectors who were dependent heavily on the traditional way of functioning, probably the small manufacturing units and textile and things like that, they have suffered, I would say, the biggest blow in terms of COVID impact. So how do you look at this change going forward? I mean, the behavior.
Sectors which are very touch focused, like airlines, hotels, tourism, say gems and jewelry, obviously they have got badly affected. They've still not recovered, let me say, anywhere close to the pre-COVID times. One of the things to note is that there are many sectors. We talked about sectors that are affected. Many sectors are actually coming back. If you take of agri-tech, there are now people which are traditionally for 100, 500 years, maybe never reformed or didn't reform substantially. Suddenly there are maybe 400, 500 agri-tech companies. There are so many education tech companies. India has maybe 1,000 universities and 300 million students in schools, and suddenly people are creating platforms to make that happen. Maybe the video technology industry is a new industry, and therefore anybody starting now should of course focus on the new sector which has an opportunity of multiplying from even post-COVID.
You can catch this exclusive conversation only on Leaders of Tomorrow on ET Now at 10:30 p.m. For now, a very quick break.